so? Let's discuss this some more with Andrew Gray, who heads the financial services practice at PricewaterhouseCoopers here in the UK. Thank you very much indeed for speaking to us. So, as we're hearing, there are almost two-thirds of financial services companies in the UK expecting a rise in business volumes. Tell us more about what this is going to be driven by.
Yes, I mean, looking at the way banks and other institutions responded, I mean, they see a demand from industrial and commercial companies coming through in a much stronger way than they'd seen before. I think this generally reflects an optimism that whilst the economy is still in very tough conditions, nevertheless, companies are looking to expand in the future, and to do so, they'll need to rely on funding from the banks.
So some encouraging signs there, but a proportion of those surveyed are also worried about the impact of regulation on their businesses, right?
Oh, absolutely. I mean, and we've seen recently that the regulators have been very tough with financial services companies. We expect that to continue. I think there was a huge amount of concern before the G20, and whilst there's been some easing of the timeline by which capital will be required, there's nevertheless significant concern about both the regulatory environment and the capital that banks will need to hold.
So what does that mean then for the bank's profitability?
I mean, because the rules have been delayed, the banks do have a little bit of time to prepare themselves, but nevertheless, the higher level of capital they're required to hold, that will impact profit in a negative way, so they will become less profitable. And
what does that mean for the wider economy?
I mean, generally, if the banks need to hold on to capital, then their ability to lend, particularly at the riskier ends of the market, will be less than it might be otherwise. So we can see a potential tightening of the bank's ability to extend credit.
How much higher, how much higher could the capital go? I mean, currently you've got an 8% ratio. Could we be looking at double figures?
I mean, it's always possible, and the regulators have still got to do some testing to see what level of capital is sustainable and what would be required to prevent another financial crisis. Also important is the extent to which they consider different types of capital, whether certain forms of capital that are currently eligible for the ratios will be excluded going forwards. So it's going to be a difficult time and uncertain until more rules are clear.
So, I mean, there needed to be some action in the wake of the financial crisis. Is this also a positive thing in light of cash infusions by taxpayers?
Oh, I certainly think that there is a general recognition that the capital levels needed to go up, and banks had always anticipated that. It's really a matter of just by how much and how quickly that is the real concern.
And, I mean, the communique also indicated that they would be allowed time to put these rules into practice, and presumably this means that there won't be any kind of immediate plunge in economic growth, but...
I mean, I think that's right. I mean, certainly 2012 was the initial thought. The banks had got grave concerns about their ability to quickly respond to that without having a negative impact on the economy. Clearly, if that can be pushed out by a few more years, then the impact will be minimal.
Now, the Institute of International Finance, a banking group, they unveiled a study this month which said the Basel proposals could cut economic growth by 3 percentage points in the US, Eurozone and Japan over the next 5 years. Is that something to be concerned about?
Well, I think it's the point that if the rules were implemented too quickly, then we could see a negative impact on growth, and potentially the overall sort of growth rates will take much longer to recover to sensible levels.
And let me ask you, in light of the survey that you've been participating in, what could that mean specifically for UK banks?
Well, I think the impact on the UK banks could mean that they would need to put aside more capital. It would limit their ability to lend into the marketplace, and that would have a negative impact both on their consumers but also the wider economy.
OK, well, thank you so much for joining us. Do appreciate it, your time. Thank you.